Hey, good afternoon. George Cavaligos for HFT bonds. Well, how not to trade a C wave? The market's strange when it's correcting, and I think we're going through a corrective pattern. I always have trouble in these things when the momentum trades that I usually try to put on don't work very well in this kind of environment. I got tons of sell signals early this morning, right after the opening, when we saw some big sell order hit the pit. Didn't work very well. I think the market went from 02, 04 area down to 01 in the 10-year. And then immediately turned around and started grinding higher, and I should have had a tighter stop, and I left a loose stop on it because we had the big bearish outside candle, and I thought that would have been a big, powerful trade. And in a C wave, you got to look for the bear signals because you're looking for another leg down, but C waves always go further than you think. They're always tough, and I kept everything real small today because I know these corrective patterns are horrible. I had 3 trades today, one nasty one and then 2 small ones, and I think I ended up down, I want to say 5 ticks on the day, which isn't bad for me. So I'm going to take a look at this Sunday night. We'll see what happens. Equities are driving this train right now, and we're looking at some of the fib retracements and maybe even the range breakout all the way back up to 132.26 in the 10-year. On the bonds, we're looking at the fib retracements on the way back up. I highlighted the 38% retracement at 147.23. Typically, these things can go further than that. The 50% retracement's 148.06. Next week we have 2-year, 5-year, and 7-year auctions on Tuesday, Wednesday, and Thursday. Those aren't that big of a deal. Very little news. I think we get the FOMC meeting on Wednesday, but what are they going to do? QE5? I don't think they're going to do anything. It'll be interesting to see what they have to say, but I don't think we're going to see any kind of major change in the statement. So I think really little economic data, weak equities. You're going to have a retest of the previous lows. I think the low this week in the S&P was 1416, and it looks like they're doing some kind of weird big double zigzag corrective pattern off the highs too. If you look at the S&P chart, you had A, B, C down, and we had label that big A for the first zigzag. Then we had a big B wave up to yesterday's highs in the morning, and now we're breaking down again, and I think we'll go down in a big ABC. So it's going to be choppy. I think you can trade these ranges, but I got to be more flexible in these corrective patterns. They take longer than you think, they go further than you think, and if you're just going to be stuck in the short trade like I was today, you're not going to take advantage of the opportunities on both sides. I think I had early this morning, 2 or 3 buy signals and 2 or 3 sell signals. You could have scalped all those for a couple ticks. In a corrective pattern, that's probably the best way to go. Instead of trying to put on, pick the top, put on I picked the top of the C wave trade. I traded like a moron, basically, is what I'm trying to say. So, all right, we're going to have some attitude adjustment this weekend. Going up to the cabin to put the boat away and put the storm windows up and all that stuff, get ready for winter. It's, about 10 minutes before the pit close. This video will probably get up late. I know it's really late in London, and Jill went out, so the video probably won't get up until later. But we're going to watch on the upside here for these next fib levels. On the 10-year, 132.16 plus, that's the 382 retracement. I'm thinking the 10-year is going to lag on the way up. The bonds will lead the way. We got close to the 382 retracement at 147.23. The high right now is 147.21. So we're close. The 50% retracement, which is a much more likely area, is 148.06, and it's very close to an old high that might be the previous 4th wave highs, right around that same area from October 16th. I think it was 148.06. Well, it's exactly there. Interesting how those line up. somewhere in the 50% to 618 retracement at 148.21. So somewhere between 148.06 and 148.21, we're probably going to want to look for, you know, a solid reversal signal up there. We're starting to see a little divergence right now. Bonds just made new highs by, looks like a tick. Ultras made new highs by a couple ticks, and the 10-year didn't make new highs. So we're starting to see a little bit of divergence already. It's an early warning sign. We chatted in the chat room a little bit with one of the guys about maybe buying some puts on this rally. I said buy a little bit here or on the close today, and then maybe Monday we'll get a shot to buy a little bit more before the market starts to focus on the supply and the dealers start to jockey the market back and forth in terms of, you know, getting a dealer concession for the auctions. That's it. Guys, have a great weekend. I think it was a decent week. I didn't look at the P&L, but I think we did okay this week, except for today. So, corrective patterns, you got to shift. I didn't shift fast enough my trading style. I got to remember in corrective patterns to trade both ways, and in impulsive patterns, you got to trade with the trend. That's the main rule that I think you can learn, one of the main rules you can learn from Elliott Wave. Have a great one, guys. See you on Monday.